Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. One of the things I like to do is looking for individual stocks and looking for opportunities within the stock market, especially when it comes to high quality businesses. So what I would like to do today is share with you guys 5 stocks that I would love to buy if the market crashes today. So some of the companies I do own, some of them I don't, majority of them in fact I don't own them right now, but I would love to add these companies to my portfolio if the market crashes. And right now, I wouldn't be surprised if it happens, because right now, as we, based on what has been happening in the last few weeks, you can see the S&P 500 is 8% up, and we literally just today is the first day of day 1 of March. So 2 months in, we're already 8% up. I think last year, what was it, 25%, 26% up the whole year. So I don't know how long this is going to continue. That we've been going up for quite some time. I mean, 2022 was nice. 2020 was nice in terms of buying high quality businesses that were discounted. But 2023, 2024 started really well. 2023 has been wonderful for us. Again, I'm not complaining the fact that the market is going up, but it's really important to also keep your mind set. Just to keep your 2 things you can do: make sure you got some cash lying around, and make sure you update your watch list basically regularly. And this is what I'm doing. So these 5 companies are on my watch list, and hopefully if I see a drop, maybe a correction in the market for 20% or so, then I will definitely be adding to these companies. And as you watch, the fear and greed is actually extremely going crazy right now, with the Bitcoin as well going to the moon. Everyone else is now talking about stock markets and the companies that are doing well. There's some pharmaceutical companies that are hitting 70-80%. I get notifications on Trading 212, like some days it goes, so and so company went up 80 something percent because their first trial was a positive for some drug they came up with. Again, that was not happening in 2022. Right now it's happening because everyone else thinks the stock market and people are going to make money. And again, there will be winners and losers, but please be careful. Okay. And these are the 5 companies I want to share with you guys today. So let's get started with the first one. As usual, we're looking for the same things. If these companies pay dividend, we want to see how safe that dividend is. Have they growing that dividend? We want to see the moat of these companies, because some of them, if they don't have a wide moat, that means some other company can come in the market and just take their shares. But the fact that they have a wide moat, that means they can potentially protect that against other companies and so on. We want to see in terms of profitability and how well the company is, how well the management is actually managing our money. Meaning basically, are they reinvesting it and making more money for all of us? And we want to see if a company has a free cash flow so they can invest in the business, buy back their own shares, pay us some dividends, pay off debt, but acquire other businesses and so on. We want to see the last 10 years, what has the company done with the last 10 years. And of course, that will not tell us what's going to happen in the future, but it gives us at least an idea. And the growth estimate for next year, growth estimate for the next 5 years, and the valuation from Morningstar. So like I said, some of these companies are super expensive. So again, do your own research and so on. I'm buying these companies if I see a drop. That's the difference. I'm not saying go away and buy them now. Do your own research. And first one is KLA Corporation. This is one of the companies in the semiconductors. Market cap of $92 billion. Moat, it's right now wide moat. Price $715 per share. When I saw that, when I was doing the research, I was so surprised. Dividend yield shouldn't be a 0. Is 0.85. Payout ratio of 23%. Latest increase was 12%, 16% in terms of last 5 years. Annual 16% growth in the last 5 years is absolutely amazing. The dividend streak is 13 years. Annual payout $5.80. Safety of 71%. Profit margin of 28%. Return on equity of 95%, which is huge. Return on invested capital 37%. And free cash flow right now we're looking at about over $3 billion. Total return in the last 10 years we're looking at about 27%, and growth estimate next year is 20%. After that, 6%. 34% premium right now. $510 per share is where they think the price should be, and right now it's $700. That's over $200 per share of where it should be. Right, that is the first one. So let's have a look at the second one. Again, is one of the companies that's been on the news for quite some time. I really like this company. It's been on my watch list for quite some time. Right now, Eli Lilly, because of that weight loss drug, it's gone up so much. In fact, I'll show you in a second how much has gone up since the beginning of the year. So a year to date, a 33% up, which is absolutely crazy. So currently has 678 billion market cap. It has a wide economic price right now, $778 per share. There are analysts out there that are saying this company should be about 1,000 right now in terms of their price targets. Dividend yield 0.69, payout ratio 72%. Latest increase was 15%. 15% and the 15% in the last 5 years. So they're growing that dividend quite nicely. The dividend streak of 9 years, $5.20 is what you would get. Safety is 96% right now. Profit margin 15%. Return on equity of 48%, and return on invested capital of 29%. Now check this out. I actually was quite surprised when I saw this. It's right now it has a negative free cash flow, which I actually didn't believe. In fact, I'm going to show you now. So looking at Yahoo Finances, you can see it had $4.4 billion of free cash flow in 2020. 21 it was growing 5.3, then came down to 4.6, and right now in the 2023 it was basically about the same. So the trailing 12 months, of course, is the same as the 2023. So it's right now is actually down $3 million, basically $3 billion of free cash flow, which is really ridiculous. So I will find out a bit more information, of course, before I would ever invest in this company, because if it has a negative free cash flow, again, some of you might be thinking, why is that? Why are they giving a safe dividend? In the long run, the company might, they just don't look at just the current free cash flow. Of course, the company has still a net income they could potentially use to pay off that dividend and so on. So they're not just the safety does not just take into consideration just the free cash flow. There are other things they look at. I think I've talked about it in another video. Right now, total return in the last 10 years about 29%. Growth estimate next year is 45%. This is why people are basically buying this company like ridiculously. 50% for the following 5 years, every single year. Overvalued by 51%. They expect the price to be about 500. People out there right now saying it should be about 1,000. So double where it is absolutely madness. Anyway, moving on to the next company is one I have already in the portfolio. That's Union Pacific. I like this company. Railroads are very stable businesses. Of course, if we're very cyclical, if the business, if the economy is doing well, a lot of people are buying products. A lot of these companies then will ship those things, and then they have to use the railroads. This company has to transfer those goods between cities in the United States and so on. So it is interesting, based on only the United States. So they're not outside the US, but it has a huge market cap of $555 billion. It has a wide economic price right now, $252 per share. Dividend yield over 2% right now. Payout ratio 50%. And latest increase was 0. So they have not increased this dividend, which I'm actually quite surprised in the last year. And I looked at how much they paid. In fact, let me show you. So if you go to Seeking Alpha, click dividends and click dividend history, what you will see here on the bottom here. So 2023, they have not increased it. They quarterly, they paid the same amount, whereas in previous years they will pay 3 that are the same and then increase 1, and then 3 that are the same. And does that make sense? So I'm not sure. So I'm waiting for the 2024 increase from 2023. So possibly that will explain. I'm not sure. Anyway, latest increase was not there yet. 5-year growth rate of 11%, which is quite nice. And they're not going to lose this. I don't think they want to lose that, of course. So there is explanation. I'm going to look into it, of course. Dividend streak of 17 years of increasing that dividend. Annual payout is $5.20. Safety 88%, profit margin of 26%, return on equity 47%, which is absolutely huge, and return on invested capital of 15%. So in terms of this side of things, I really like the business. I like the free cash flow, $4.77 billion. and total return in the last 10 years about 12%. Growth estimate next year is 13%, 10% after that. Hence why it's basically expensive right now. Everything else in here looks absolutely perfect, and for that reason it's actually overpriced right now by 21% according to Morningstar. $209 per share is where they think the price should be. Right now is 252. Next one is Accenture. Accenture is one of the companies that I have had in the family portfolio. I've sold it once it got too high, and then it carried on going up. 235 billion market cap. It has wide economic moat. $381 per share right now. In terms of dividend yield, 1.38, payout ratio 42%. Latest increase was 15%. 5-year growth rate of 11%. 18 years of paying that dividend, which is quite nice. Annual payout $5.16. Safety 92%. Profit margin 10%. Growth return on equity of 27%. Return on investor capital of 33%. Again, another really solid matrix here. Free cash flow right now $9 billion. Total return the last 10 years 17%. Then 10% next year growth side of things, and then 8%. 38% premium right now. $271 per share is where they think the price should be. Again, another solid businesses. Probably that's why it's so expensive. Of course, it is one of those IT companies out there that work with every single company out there from consultant side of things. And the final company is S&P Global. Basically, this company has a wide economic moat, 159 billion market cap. Price right now $430 per share. Dividend yield of 0.85. Payout ratio 29%. Latest increase was about just above 1%. And 5 years, they in terms of dividend, they grew that dividend on the 12%. 50 years of increase of that dividend. So this company is a dividend king. Annual payout $3.64. Safety 99%, so the highest on this list. Profit margin 21%, 7% of return on equity. Return on investor capital 8%, and $3.5 billion of free cash flow right now. Total return in the last 10 years, we're looking about 10%. Growth estimate 10%, 19%. Growth estimate next year, we're expecting 14%, then 13% after that. Morningstar is saying it's fairly valued. The only one that seems fairly valued right now, $410 per share is where they think the price should be. Right now is $431. Okay, so it's interesting. This is the only one that they're saying is fairly valued at the moment. But I've been buying this company for a while, so I'm quite a bit. So I would love this company to maybe come down another 5% or more, if even 10%. It will be absolutely wonderful, so I can add to this. Genuinely, if the market starts crashing, these are the companies I would love to have in the portfolio. The ones that I don't own yet, okay, definitely would love to have them because their businesses are really good. They're profitable businesses in the high demand. This one here, of course, it fluctuates. It depends on the drugs that they come up with. And in terms of Sharia compliance side of things, absolutely no issues. The only one that has a high interest bearing debt is basically Union Pacific, and I have nothing to worry about in terms of that, but the rest of them are absolutely fine. So there you have it. That's the 5 companies I wanted to share with you guys. And as always, do your own research. Please don't buy any of these companies because I said so. They are on my watch list. I will be doing a bit more basically single videos on some of these companies just to kind of show you a little bit more information about them. If you're interested in any of them, let me know as well. If you're interested in any other companies or in the stock market, let me know, and inshallah I'll look into it. Have a wonderful day. Assalamu Alaikum.